in business news.
Τις προβλέψεις τους για την οικονομική ανάπτυξη της παγκόσμιας αγοράς και τις διακυμάνσεις των νομισματικών ισοτιμιών συζήτησαν εκπρόσωποι τραπεζών, συμβουλευτικών και επενδυτικών οργανισμών στο συνέδριο Wealth Management Forum, το οποίο διοργάνωσε η διεύθυνση Wealth, Brokerage Asset Management της Τράπεζας Κύπρου.
This is the first time such a conference is organized in Cyprus. We have invited a number of renowned asset managers globally that will present their views for 2016 for the global markets outlook. The event is very important, bearing in mind what is happening in the world financial markets. I think this could not have come at a better time, where we intend to inform our clientele and our partners in respect of the global outlook for 2016.
So this event today is about just re-engaging with our customers at the start of the year, to have a conversation with experts about what they think is going to happen to world markets, both equity markets and fixed income markets. And I think it's a good time for people to just take stock of what they think given the volatility in the global markets. My own views are that there's a lot of very competing issues in the world, low oil prices, a lot of currency volatility, stock markets not starting the year well, US Treasury is very tight, uncertainty around what bond market yields are going to be. So I think everyone has to have a very firm personal view on what is going to happen to the market, and I don't think anyone really knows. We all just have views.
Σύμφωνα με τους ομιλητές, η παγκόσμια οικονομία δεν θα προχωρήσει σε ύφεση, με την ανάπτυξη όμως να παραμείνει σε χαμηλά επίπεδα, παρουσιάζοντας αισιόδοξα σημάδια για ανάκαμψη.
Cyprus has now had a year of growth in 2015. Things are still difficult. We have very high debt. There is high unemployment, but things are moving in the right direction, and we are looking at to consolidate this growth in the next few years. Of course, there are a lot of risks.
So essentially, the conclusions of this presentation will be stating the fact that the fundamentals of the credit market are intact. They are more or less in positive. In the US, we have an environment which is slightly more positive in terms of growth than what we see in Europe, but obviously that also comes with fundamentals which are slightly different. We have fundamentals in the US which see a higher leverage than we have in Europe. In Europe, leverage is still contained. In the US, leverage is creeping upwards. Nevertheless, most of the risk that we see going forward in terms of fundamentals in the US should be contained to the energy sector and commodities complex.
Well, we're really just highlighting that whilst equities have had a very, very difficult start to the year, valuations generally in equities are okay, and we really shouldn't extrapolate what's happened in the first 2 weeks to the rest of the year. There are some good opportunities, we think, for economies which are still performing okay in the US and Europe to generate profits growth for companies, and for equities to have a reasonably good year this year in 2016.
As volatility comes up quite strongly during 2016, most of the trades will be pair trades, mean market neutral, so we'll exploit some differential between sub-asset classes within the same asset class. For example, in one of the trades will be long small caps versus large caps in US equities, so therefore in aggregate will be neutral in the market, but we'll try to make some money out of that differential.
Most analysts on the street are predicting eurodollar or forecasting eurodollar at 105 or 106 levels for this year. We've taken a view that we might reach 120. And the reasons for that are that we are particularly bearish and dovish on future Fed hiking cycles for this year.
So our view of the outlook for 2016 is that we expect global economic growth to slow this year, and for inflation to stay low. But at the same time, we're not anticipating outright deflation or the economy falling into recession. We think the upside potential in global equities is relatively modest, but we probably expect Europe and Japan to outperform US. We remain pretty cautious about emerging markets. In global bonds, we think that US Treasuries look slightly more attractive than core Euro sovereign bonds, although the overall performance potential for either is pretty limited.